since the start of the disruption we've been having, and we've been seeing a lot, we have been noticing that since COVID-19 was announced as a pandemic, followed by IMF announcing the Great Lockdown to be leading the economy to face a deep recession. Startups on pretty much all stages are worrying and are not understanding where things are going to take them in terms of startup progress itself and in terms of investment. So I guess my first question is to both of you. If anyone would like to jump in, is it time to panic for startups yet? Fadi?
Obviously, I like to be an optimist, and I think, I mean, for startups, it's always good. I mean, we manage as A15 a bunch of old companies with mature, and maybe some companies are more than 10 years and doing more than $80 million of revenue, and others are startups. And we believe that there are opportunities, as of course, as much as there are risks. But again, for startups in specific, I would say the opportunities are quite there. The good thing about a startup, you can be nimble, you can be agile, you can pivot, you can find ways to even go on the offense rather on the defense. So it's not time to panic. It's a delay of things. So it's not the end of humanity. So we're going on. Yes, of course the risk would be a bit on. I would say, of course, I mean, if you're squeezed on cash and you're building something that is not of a necessity at the moment, maybe there is a reason to believe, to think about pivoting, about finding ways to survive till this ends. But again, on the other side, if I talk a bit about the mature companies and what we've seen after we've looked at the companies and we asked for doomsday scenario and different scenarios to foresee the coming budget and so on, there is of course a bit on two areas. First, the where you operate. So Egypt, because also we operate in Egypt and in the region. So Egypt is different than UAE and KSA, and I say these two countries because they represent an important market for us. So these countries are more on a lockdown than in Egypt. So some of the businesses that we've seen are performing okay in Egypt versus complete decline in the other countries. So back to your question, it's not time to panic. There are ways to manage things. One of the things that you need to look at is your current situation, the products that you're offering. Where are you on your product? Did you launch? Are you launching? Do you have the funds? So some startups would have received the funds before Corona, and they were building the product or the service. So maybe this is not a bad time to actually build and focus on the product and be ready post-Corona. Of course, given the fact that you are expecting what would be post-Corona. Of course, no one knows when it will end, but we know it will end sometime. So having plan A, B, and C, and this is what we've done, is one of the recommendations that I would give to startup as well.
Perfect. Thank you, Fadi. So this is more on the, you have shed light some on the MENA situation, and that actually Egypt is performing in terms of market performance, is performing a lot better than other countries who are on complete lockdown, that may be leading to more issues or more problematic situations. I know Kareem has been doing a lot of travels before the airport lockdowns around the world, and so you've got the chance to see firsthand the differences and the pivots that have been happening and the disruptions that have been happening globally. So from your perspective, from the international side, where are the startups and what's happening in this space? What's happening post COVID-19 and what's happening towards the recession?
Yeah, it's a great question. So I think a lot of similar things to what Fadi was saying. Companies are really taking a moment to kind of pause, take a step back, and kind of assess and see what opportunities there are. There's a lot of things that are driving change right now. For example, in the U.S. from a regulatory perspective, something that was unregulated, such as telehealth, right, or digital health, now is becoming very commonplace as a byproduct, right, of COVID and the circumstances that it creates. And traditionally, usually regulation comes in after there's validation from a consumer market, right? And then the regulation kind of comes in to kind of build around a way for it to work. So you're seeing a lot of opportunities for that in different markets for these things to kind of develop, the things that were not really codified prior. You're seeing from a regulatory perspective, from the specific company perspective. Again, you're seeing a lot of innovation. You're seeing companies that are identifying that maybe my product or service is not a must-have; it's a like to have or a nice to have. And then they essentially, some of them are looking back and saying, what is, if we have specific personas that we were primarily focused on that were creating the highest growth. Maybe what we do, they might be very price sensitive and they may be affected by this. So we maybe focus on a different type of persona with the same product. Maybe what they do is they actually begin iterating on their product or pivoting their product for a completely different use case. And that's something, for example, that we have in our portfolio. We have a company that was just about to launch, and it was an augmented reality application that allows you to discover tours around you, right? And I don't think anybody's traveling or exploring tours at the moment. So, okay, how can we take that utility and apply it to something else? Right now, we're looking at maybe some sort of like augmented reality social connection, or being able to identify people who need assistance or can provide assistance, more of like the communal aspect of it. So I think, again, like in the macro picture, I think a lot of companies are experiencing a lot of the same things, irrespective of the markets. Some markets just being the way they are from a regulatory or consumer behavior perspective, just gives different opportunities for those companies to be able to move.
Great, thank you, Kareem. So I would say you've been talking a lot about the differences and shifts in markets, or shifts in customer behavior, basically towards from traveling, as there's a travel ban. So let's channel the energy towards something else. From this kind of perspective, I would say there is also a shift in the emerging industries that we have been seeing for the past few years, and towards what you expect to be rising after post the COVID-19 pandemic issue, once it's controlled, inshallah. So basically, from this scope, from your side, what do you see the global shift is going to look like? And following on that, I would like to see how Fadi would think that kind of I would care to know Fadi's comments on the MENA, and if Egypt is going to follow the same path as these industries or not.
Sure. So I think some of the obvious ones, like I mentioned, is telemedicine, right? Telehealth, I think, is going to be one of the big winners emerging from this. The second thing, which everybody's seeing right now that we're actually experiencing, is the lack of the necessity to do things in person, right? And what is that going to translate to? Okay, so teams can work remotely. What does that mean? What does that even mean for a business? What does it mean for a startup? If you don't need to have an office, or you can minimize your office usage, that allows you to reduce your overhead, that allows you to maybe even reduce salaries, because employees don't need to travel, and there's a significant component of their income that they're not going to need to allocate. So I think from just the way people operate in general, it's going to have a fundamental shift. And again, I think it'll change the way that startup companies specifically, because they're used to being agile, they're used to being very, very lean. I think the way they operate is going to be very, very different.
So, Fadi, from your perspective, do you think the shifts are going to be the same? Is it mainly healthcare based, or do you see other sectors as well rising in Egypt?
Yeah, I see another sector, but also I see comparing the countries. Egypt, again, the golden triangle for our region, we have a bit of an issue on the infrastructure, and this has been apparent because of all that. And I mean infrastructure in terms of the internet capacity and whatever supports the digital transformation. So we need to work a bit on that. So in UAE, for example, they're a bit more advanced, so things runs more smoothly. The government works very normally there. We are more in trouble than this. So we have this a bit on the lower side of things, which is different than US. But on the verticals and on the businesses, of course, health, the health vertical is very important. And another one that I've seen and I've witnessed when I go back home or the days I work from home is the education. So we weren't ready for the online education in Egypt. And maybe in the other countries of the region they were. We lack a bit on, again, the infrastructure of the schools and of the universities to have the online education as something good. So there is an opportunity there. And of course, and the third vertical that I've seen is the what relates to the companies and the productivity, the online productivity. And for that, companies were a bit reluctant in Egypt, and I've led this in our companies to have a work from home policy. And there was a lot of always debate. If we do this, then we lose the employee. They can't work from home, and we're there. And companies have started to adapt the different productivity ways. We've talked to our friends in Europe to see how they can manage, I mean, the non-quantifiable departments, how they can manage and how can they quantify their work, like the supporting function, I mean, versus like the development with the hours and so on. So we've looked at different solutions and we've tested and found some interesting direction there. So what I would say, the health, definitely the education and the productivity in general. And as I told you, the differences between the countries.
Perfect. So, there are two things that are kind of in play now that I want to take your perspectives on. So, basically, from one side, there is always this this kind of concern that how many people of the Egyptian population are actually working from home, and how many people of the Egyptian population are actually online now doing work, versus how many else are not, and how many else are still in the streets, and how many else are still working on other things. And we have also been noticing a big rise in e-commerce and payment gateways and fintech, specifically in this area of the region. Not so pretty much we know for a fact that the whole MENA, and I know Kareem has from Crunchbase basically also have a couple of investments in the MENA as well. So maybe you could also add some perspective on that. And we have also seen that the whole MENA is unbanked, and with the banks being closed, we don't have that kind of opportunity in a lot of countries. I mean, not Egypt, but in a lot of other countries, we don't have a lot of opportunities where the unbanked people can access these kind of services currently with the coming challenges. So how do you see this pattern going on?
I want to add that maybe I didn't mention, of course, the e-commerce and the fintech, but to answer your question about how many people in the street and online and so on, I've seen a very interesting report from Apple. They've been tracking the people in different countries to see the normal trend before Corona and after Corona. And we've seen in Cairo, I got the Cairo versus like Germany. So in Cairo, the traffic of people in the streets and the cars and so on went down to 50%, compared to Europe to 90%. So this tells you a bit on why the lockdown is really not a lockdown in Egypt. So that's the first part. The second part, of course, maybe I forgot to mention this, but definitely for the e-commerce, you know, we invested in a new e-commerce for fashion. And as you know, fashion is not a necessity. And because of the retail closure, we've been bombarded with the different brands that want to go online quickly. The companies plan to go live in June, but everyone is now finding ways to go right now to get any money because, again, like 80% of the shops and the malls and so on, the weekends, they don't work and so on. So this one, definitely. And we've invested a lot in the ecosystem, in companies within the ecosystem of e-commerce. So we've seen either a growth or at least not a decline for these companies, whether these companies handle payment or handle delivery or handle actual e-commerce. So we've seen, based on the necessities or non-necessities of these products, an increase or a decline on that. But on the overall, we've seen a bit of growth. And the health tech as well. I forgot to mention one of the investments we have there. We've seen a 35% growth in March versus the previous months. So that to add to the question of the verticals and where people are.
Perfect. Thank you. Kareem, do you agree with these kind of patterns? Do you think e-commerce is going to be picking up or continuing to pick up even after the COVID-19, or are we going to go back to our old habits of actually going physically to buy our products and so on?
I mean, I definitely think that a percentage will go back, but I think there's going to be, like I said, with the example from work from home, I think there's going to be a notable percentage that will be more e-commerce focused, right? And to kind of add to what Fadi was saying, there's also like secondary things aside from the core e-commerce itself, like being able to provide products digitally. It's actually like the secondary components, right? So what does, how do you actually create an immersive experience? For example, one of the companies we've been looking at was a company that's able to leverage augmented reality to be able to take physical products and literally spin them around, right? To be able to see what they would really look like, to really get that up close and personal feeling. And I think there will be a much bigger drive because augmented reality and virtual reality, I think as part of the e-commerce experience is going to play a very, very big role, right? As a kind of a secondary supportive function. Regarding, go ahead.
Yeah, sorry. So I wanted to take an additional point to that, basically, where because of the challenges that the global supply chain is facing currently, and the limited travel and limited shipping, basically, that everyone is facing, there is a question regarding the culture and arts industry. Do you think there's a good chance that arts and culture, this is a good time for arts and culture to pick up, or is this a bad time to start investing into something new in that kind of sense?
It's a really good question.
So basically local products, yeah.
Yeah. That's a really good question. Fadi, do you want to start with some ideas on that?
No, but I stumbled across the Google Museums and I thought it was an amazing way to have the kids enjoying something cultural at home instead of the PlayStation and the gaming and all that. So, but I haven't really looked at the culture part and the art part of it, which is quite interesting, to have exposure on it while you're, locked.
Yeah. So from culture, I also meant so local products, basically, not just culture and arts in terms of activities and so on. So yeah, I just wanted to. I thought I wasn't clear. I'm sorry.
I think
so
definitely.
Is local products going to pick up, basically?
Yeah, I think definitely there's going to be a more inward focused, product and supply shift, right? I mean, we were already seeing kind of, even pre-COVID, we were seeing a lot of very protectionist measures kind of coming into play in the global market, right? The US and China, for example, and being able to focus more about production at home. The other thing too is if you think about the supply chain issue, right? Businesses are meant to run on a very, very extremely efficient, right? And that doesn't allow for volatility in the supply chain management. So the closer that all of your resources are, or your products or your inputs are, the more you'll be able to control for volatility and be able to manage for that. So I think that's definitely something, even from the supply chain perspective, that companies are going to be looking at, right? If my production comes from overseas and it takes 3 weeks and I can turn that around to 7 days locally, right? And I can manage capacity and more volatility and capacity, that may be a safer bet, because again, with the supply chain logistics and the lack of being able to kind of like increase and decrease based off of volatility, I think that's going to have a significant effect.
I agree 100%. Yeah.
Mm-hmm. And so also from the agri-tech sector or agricultural sector, basically, we have not seen a lot of activities in Egypt specifically. We have seen some activities coming, or some interesting startups coming out of Lebanon and so on. But still, we have not seen anything significant in terms of a growing company that has raised a decent amount to grow sustainably enough. But there may be a shift now to locally produced products, and especially with the prices and the demand heightening in terms of these kind of perspectives. So is this something that you may be looking at in terms of financing in the coming times as well, in terms as an essential business?
Yeah, very interestingly, for us back in 2017, Google Ventures invested in a concept that was essentially, it was farm to table, but it was more like mass production. And it was really interesting, the story that the partner at Google Ventures, that he explained, is that he got something from, it was essentially a local greenhouse that created everything organically. And it was delivered to him literally within hours from being taken off the vine, a tomato off the vine. And he put it in his house, and he traveled for a week, and he came back and it was still fresh, right? Because you removed essentially a lot of the supply and a lot of the time that would be wasted in transit. So this was something that was very, very interesting. I think even now more than ever, it's going to be something that may be a much bigger focus. We already know that there was kind of a pretty notable movement in the market going towards more organic, more local type of initiatives anyway. And I think that this is definitely going to just accelerate that.
Okay. So, and I would like to take the conversation a little bit towards from the emerging industries that we expect to be taking place to where the startups are actually now. So a lot of the startups that are actually working now, if they were in a shift from a nice to have product towards a necessity, if they were in the rising kind of industries, they still face a bit of cash shortages and cash flow problems, maybe cost structure problems. However, they still do have the interesting opportunity that is still in the market. So do you expect that there will be some mechanism to help overcome those, governmental and maybe also from investors? Would investors be willing to look at this kind of opportunity as something to make money out of and help the startups that are working in the market?
Yeah, I mean, from a governmental part, we've seen this in Europe, and many of the companies that are affected by Corona, and whether they're small, medium, I'm not sure about the startups, but they could file, the companies, they could file to the government, and the government covers up to 70%. I'm talking about the OPEX cost, I'm talking about the cost of the employees, the salaries and so on. So they can file, and the government would cover, I'm not sure about the US, but in Europe, this is happening in Germany and the UK, where a government is covering up to 60 to 70% of the cost of the employees, at least. Mm-hmm. From an investment perspective, definitely. I mean, if and this we're doing on the A15 level for both the big companies and the small companies, what we're looking at is, first, we understand that, and we make it very clear to the companies, we're not expecting, especially with the companies that generate big profits, we're not expecting to make any profit this year. Our main concern and focus would be on the employees. We don't want any employee to leave, and we make sure about that. So, and what we're doing is trying to find, to create like a reserve fund, or call it an emergency fund, out of the cash that is already produced and has been produced by the companies, to make sure that we're sustaining the companies until this goes, until this passes. And with the opportunities that are happening with some of the, for some of the startups, we're ready, definitely, I mean, for our portfolio companies to continue, or to do mezzanine or follow-up investment, to make sure that they are grabbing the opportunity without closing. So we're doing that. And for other startups that find a way to pivot to a model that would be successful to overcome this and be ready for the coming phase, then definitely yes. That's from our perspective as A15.
Sure. And from Kareem, do you think the investment and basically the acceleration, all of the entrepreneurship support kind of mechanisms, financing mechanism, do you also think they would continue to perform, just shifting a bit on industries and so on? Or do you think it's going to be a little bit of a hold on until we figure out what's happening?
No, I think they'll continue to perform. I mean, you have other opportunities, right? You have the ability, for example, to consolidate companies, to be able to make a purchase that might enhance the value added of a portfolio company that you have, whether it's to gain functionality, market share, et cetera, right? So I think that's one angle and one way that things could be. Aside from that, you obviously have different opportunities, right? Like this is creating a ecosystem or circumstances where you find other opportunities that weren't previously there. So I think there is a balance. I think knee-jerk reaction, everybody just pauses, for a minute, and kind of like everyone pauses and kind of takes a step back. And I think that's kind of happened already, and people are now beginning to get beyond the point of triage. Like Fandi was saying, one of the things that we were doing was also working with the companies, helping them triage, trying to see how they can reduce expenses, focusing on the health and wellness of the employees, right? And then putting together contingency plans and helping them essentially work and giving them that support. So overall, I still think that there's going to be other opportunities. It may take, it may have taken 2 steps back, but it's already beginning to take another step forward. And we'll see. I think it might even create more opportunities than previously, because with any type of massive volatility or disruption like this, you're literally opening up huge gaps for additional opportunities. And I think that there will be a vacuum going into those gaps.
Perfect. And so for both of you as investors, since you both agree that you're actually going to continue investing, and this is creating a whole new level of opportunities, so it would be unwise to just hold on it and say, no, I'm going to just wait for it to clear out. From that kind of perspective, we have been reading a lot of articles, and we've been seeing a lot of people kind of giving us some insights on, what investors wouldn't be willing to invest in top line activities now, or expenditures basically, and in return of bottom line basically expenditures. And what I mean by top line for the entrepreneurs is basically if a company comes to your financial institution and they are pitching an opportunity to invest in customer acquisition, new customer acquisition, basically, rather than in holding back talents and making sure that they can deliver the value itself, and making sure that they can sustain the situation itself. How would you like to comment on that? Would that be something that you would be willing to do, or would you shy away from top line activities?
I'll start. I wouldn't shy away from top line activities if they had a very thorough plan, right? Like, okay, you're going to focus on customer acquisition. Tell me what the next phase is like, right? Show me the numbers. Show me the statistically relevant data, right? If you're talking about using this opportunity, because customer acquisition costs are like almost non-existent now, right? Like it's extremely low. So it may be a good idea where if you're paying $50 to acquire a customer, now you're paying $1 or $2. It may make sense for you to leverage this time to be able to get that top line growth, right? But you have to also tell me how do you forecast the next phase? Okay, after the acquisition, then frequency in the product, and how do you convert that into actual reoccurring revenue or baskets or bottom line, right? So I still think there's plenty of opportunities. Again, there's always a silver lining, but it is very contextual. It's on a case by case.
I agree with Kareem, and I want to add because we have one of the products. I mean, within one of the companies, we've seen the cost of acquisition really going low comparatively because people are online. This is a company that is offering in online entertainment. So the cost of acquisition went down. However, the lifetime value of the customer is shortened. But what we've seen, and adding to Kareem, as long as the unit economics will eventually make sense, and there is a plan that this would become a sustainable and profitable, and not only growing on the top line, then definitely yes. But just to add, Hamza and we didn't say that we're investing in the moment. We're cautiously optimistic. We're putting the reserve fund for our companies to make sure that we cover them in case of the corona delay to Q3, Q4, and so on. So we're not really investing outside, but of course we're scouting, and we've seen some very interesting products and companies on different sectors. However, it's a bit risky because as I explained before the call, I mean, our funds comes from the profitability and from the cash, from dividends distribution of our own company. So if I'm not covering my portfolio first, then I'm at risk to invest in newer company unless there's a really, really good opportunity. But again, we're cautiously optimistic on that.
Thank you for that clarification, actually. And so I would say, from that kind of perspective, you are looking at already existing portfolio companies that are already performing in the market, and a lot of other companies are pretty close to that. Not for you specifically to invest in, but I mean, you're pretty much not going to be able to give money for all of your portfolio. So what would you say would be the right management solutions or the right actions that your startups are taking that you would advise other startups to also take? Like, what would be the right approach to basically stabilize things until you seek investment or other things?
But there are two strategies in general, and we've talked, I mentioned, but I'll give you more details about. I mean, you're either on the offense, so you're pushing, you're doing some marketing, you're acquiring a customer, you're doing promotion on your products, or you're on the defense, you're quite, sustaining your losses, you're taking care of your cost, so within these two strategies, what we've seen, because most of our startups, and I say most, are within the ecosystem that is within the e-commerce ecosystem. And for that, we've seen that actually promoting and working on the offense for these startups is generating very good leads and is doing quite good traffic, whether on the productivity product and startup that we have, whether on the other e-commerce related businesses. So being on the offense in these companies is paying off. On the bigger companies that are less, more difficult to pivot and less nimble and less agile, these companies are all on the defense because they need to make sure that they can pay the huge cost that they have. So they cannot afford to go and really push for promoting or pushing new products and so on. So they are more on the defense. And any company or startup, I mean, depending on what they're offering, which country they are, they would choose between these two strategies. That would be my advice on.
Mohammed, I think you're on mute.
Yeah, sorry, forgot to be on mute. So basically, I've been looking a little bit on the investment climate internationally as well. And my question is a little bit to Kareem, but also Fadi, if you have any insights on MENA, I would appreciate it a lot. We have seen a lot of regions who have access to data that have showed increased decline in number of transactions, or basically number of investments that are going on. In Egypt, we've been seeing. I can't really say there's a decline, but I'm more inclined to say there's a pause of these kind of transactions currently. A lot of countries, based on data, are trying to project when would be the return of the investment to the hard time. Would you say this is more of a recalibration, or do you think that a lot of investors wouldn't be interested to continue investing in the market? So a lot of investment would suffice with what they have already and wouldn't want to do follow-on investments. So basically, my question is, when do you expect the regular kind of transaction volume to return? Is it Q3? Is it next year? What are your take on it?
Very hard to kind of pin a timeline to it, but I can give some inputs onto, I think, what may help define that, right? It's all about investor confidence, right? And also investor appetite. I think that the initial numbers that we're seeing, like I mentioned before, is the knee-jerk reaction, right? It's the initial shock, and whenever that happens, everybody likes to just take a very, very slow pace to kind of begin seeing things unfold. But you have to remember, for the group of investors that are less risk averse, right? There's a fine time for them to be able to jump in. They want to be able to jump in at an early time to be able to capture that opportunity, right? And then some who are a little less averse, they may wait a little bit longer. So I think if you were to try to quantify that, look at the number, think about the number of aggressive versus non-aggressive investors and be able to see, and I think you'll be able to create kind of some correlation between there. Now, is there data available, or is there an index available based off that? I'm not really sure, but I think that'll help kind of create a little bit better of an understanding. But yeah, I mean, you also just have to remember that investors are opportunistic by nature, right? As well. So, inherently, they money that's sitting around, is not it's not working for them, right? So they want to be able to put it to work. So them putting it to work really, again, depends on their appetite and their profile.
Yeah. I have
So
nothing
my
to add
follow-on,
except, yeah,
yes,
sorry,
please.
no. Please go
Okay,
ahead.
so I just wanted to follow up on that, and my question is actually to Fadi. Basically, you can just continue on. Basically, where do you see the inter-country transactions that were previously dealt on taking place? Like, how is this going to continue? Are startups going to still have access to international investment funds and investment opportunities, or is it going to be a little bit more localized until things get by and regular travel is back on speed?
مش عارف يعني بتحرجني بالسؤال ده الصراحة. يعني كان نفسي يبقى عندي إجابة بس لا I don't know
I mean
to be honest.
from even from your perspective. I don't mean like the global thing. I'm just asking from your perspective.
But again, as Kareem said, I mean, the opportunistic, there are always opportunistic investors and ready. I mean, and this is really right time, you know, to acquire like failing companies or failing startups at very low prices. So no, I would say that there are definitely, I don't think that this would, I think no, that the appetite for investors would continue, I mean, in this region, and this wouldn't change. And no matter how long it will take for them to come back, or how long, I mean, the countries would open. I mean, some expectations are end of year, and the real worry is not to die from the corona, is to die because of the economy issues. So I like the word, I don't like the word opportunistic. I like it in the sense that you can be opportunistic by offering something that would help, or invest in a company that would help actually the community or economy and so on. But yeah, I mean, everything is opportunistic if, I mean,
yes.
So I hope I answered you. I'm
Yes, sure. So it's basically all back to opportunity. So even if you find a company that is elsewhere, not in Egypt mainly, and they have a decent opportunity in the market, and you think you can capitalize on that opportunity, you definitely be interested to go in. So my other part of the question is, as we see a shrink in the number of transactions, at least for a while, we will expect also that angel investors are going to be even more risk averse. They do not have the same mechanisms as venture capital firms, and they have a little bit of these space. Do you agree with this kind of statement, or do you think angel investors are going to be continuing? And if not, to see more fees going into that space, seed kind of ticket size? I think I was cutting off. I can see from your faces.
You cut.
Sorry. Is it better now?
Yeah, now it's better. We heard something about angel investors, and if they would stop or continue, or
Yes, so basically, to be short, we expect, or there's a lot of expectations that angel investment is going to shrink in the coming phases. Angel investors are pretty much a little bit more risk averse. Will VCs, with the mechanisms established, be willing to step into this kind of risk stage or risk ticket size, the seed, pre-seed kind of stage? Or are they still going to hold on their grounds and hope for the startups who have already made it to their stage to continue their investments?
I think that's tough because, institutional VCs or the bigger VCs, they have a mandate, right? And their mandate is a specific ticket size. There's a risk profile that they do. And if they have a little bit of flexibility, but, they're somewhat limited to going outside of that risk profile. So if you're talking about like Series A and later institution, it's going to be very hard for them to kind of fill in the angel on the angel side of things. One thing that I think you can make a fairly safe assumption that, okay, so angels will reduce they are risk averse, right? They will reduce probably their investment, but I think maybe what will happen is they'll focus more on industries that they're very familiar with, right? So if somebody I'm an angel investor and I'm a doctor and I get the med space, so I'm going to invest in med tech, maybe I won't dabble outside of that, right? Which is, I think maybe more of the movement that you'll be able to see. But overall, I do agree. I do think it will be there will be less capital at that stage.
Yeah. I would say definitely, I agree with Kareem, and especially with the institutional VCs and on the higher, on the bigger tickets, Series A and so on, they have the mandate, they won't be able to go down. So maybe this, I would say the seed VCs, some of them would maybe fill in a bit on the angel part. But again, even the angel investments, I would see the angel investors, they would, some of them based on the vertical and what they have expertise in and where they see the opportunity in, they could maybe even fund more at the right time. But yeah, but in yeah, overall I agree with Kareem.
So I just wanted to remind everybody on the webinar that we are 15 minutes to go, and we are taking questions from the questions you're already posting. So if you have any questions, please remember to post it. I'm only repeating this message because some people have came in a little bit late. So I have a question about the offline marketing business and the offline marketing channels, basically. This was a huge market pre-COVID-19 and pre-basically the great lockdown. Do you see this market kind of going back to where it is, or is it going to? Do you see this as a main channel where startups are going to go back to look at it, or do you see it as something that is completely shrinking?
Fadi, you wanna take a stab?
Yeah, we're more on the online marketing. We've seen more on the performance-based marketing going on, and less on the branding. Of course, the effect was there, and of course, less production of offline promotional activities. Let's say that's. I mean, I'm not sure if that's the answer, but that's what we've seen from our network.
I also think that one of the things that Fadi and I discussed earlier, or mentioned earlier, is that customer acquisition costs are significantly less, right, on the digital right now. So if it's cheap and it gives you the opportunity to scale and really have a much bigger capture, it just makes sense. So I think it probably will take some time before that really kicks back into gear. If it doesn't, it may not be at the same caliber.
100%.
Yes, definitely. I think the question was coming from someone whose main business is investing in billboards and so on. Yeah, I think
billboard
I think
those are suffering much now. The question, I mean, there's a nice joke I'm sure most have heard. Who decided on your digital strategy? Is it the CEO or CTO or COVID? So, I mean, going digital is accelerated across all businesses. I mean, that's a very big statement. I mean, that's happening across.
Perfect. So thank you all for joining us. I think we're good on questions. So it has been a great pleasure having you all. So we're getting some questions more. Maybe let's just take the last two questions.
I don't see. Yeah.
Okay, so basically, this is a very interesting question. What would you say to the startups who started just before COVID-19 developing the products and have not launched yet, but they had the product?
I just had a talk, but I'm having a talk with one of the startups that I was discussing, but he is exactly the same scenario. He got the money, made the product, but the product was based on a bit of offline activities that are not happening. So I will understand from him his way to how he will pivot on that. So yeah, but those who got the money and made the product, then it depends what kind of product this is. Is it a product that would be successful now, that would generate any traction now, or it's better maybe to pivot to develop the product more and wait for the post-corona and then launch it, and at the meantime understand the market better, the dynamics and so on. So it depends really on what kind of product it is.
Yeah, 100%. There's also something that I think not a lot of people really consider is if you take investment and you set out to introduce a product or service and something happens in the market, or maybe you even have you're trying to validate very early and you don't get that validation. I know people may be shocked to think, but you can always return the money to the investors, right? Like you can always let them know, hey, we don't have a high level of confidence anymore. You don't have to burn the money, keep the relationship, take some time, try to see what maybe the next thing might be. And it's a very honorable and a very respectable thing to do. I've seen a couple of entrepreneurs do it, and they've moved on in their second, third, fourth ventures to be extremely, extremely successful. Not a recommendation, but just something to keep in mind.
Interesting. Yeah.
Yeah, I hope we see that too. I highly doubt it.
Oh, yes, sure.
So there's also the last question is coming on the real estate part or the construction part mainly. This business has been going on in the traditional side for basically years and years. Do you see the current situation giving way to kind of disrupt this kind of market?
I do in a couple of different ways. I mean, I don't want to say, so think about a blend between like fintech and construction, for example. So think about like Egypt. There's a significant amount of remittances. I mean, what is it, 24 to 26 billion in remittances inbound into Egypt. Think about if you can create a platform for people who are in the diaspora that are financing apartments. That happens a lot, right? Creating a platform that is actually a secondary market that allows for microfinancing, for example, or payment plans that you can partner with developers, right, where technology can facilitate that in the real estate sector. So I think there's room for innovation like that. You just have to kind of look at the entire value chain, look at the traditional frameworks, and then from there be able to see what are some innovative ways to be able to help and support it. As far as the core construction, like actually cement and stuff like that, it's not really my game, so I can't really speak to it.
Perfect. Fadi, do you have any other reflections on this?
No.
Okay, perfect. So again, as we were wrapping up, thank you all for attending. I think I would love to leave the final words for our panelists, a couple of minutes, maybe share some advice to our entrepreneurs, maybe the startups, investors, the angel investors that are listening. I just wanted to recap on the highlights of what we've been said. Basically, the most interesting or promising sectors that you see coming is, please correct me if I'm wrong, is basically edtech, healthcare, and telemedicine, basically. So agribusiness is also pretty interesting. Local production is going to pick up, supply chain as we got it. And so those are the most interesting areas. If you would like to comment on that or basically give some final tips or final advices for our startups, and thank you so much for being here with us today.
Thank you, Hamza.
I just want to add a couple of things. One is the e-commerce. I think that we had mentioned kind of a little bit later. And think about marketing tech too. Think about marketing technology. Right now, traditional market, a lot of people are spending time on OTT platforms, right? Like Netflix, Hulu, HBO, etc. Think about the back end type of marketing and data management for consumers on that. I think it might be another industry that's really attractive right now.
Yeah.
Yes, perfect. Thank you, Kareem.
No, I don't have anything else to add. I mean, I've talked about all the verticals, just that really, I mean, this time, and from the bottom of my heart, it's all about staying positive, being optimistic, growing yourself. I think it's a great time to work on yourself. And it's a marathon. Again, I mean, life and the startup scene, and I mean, as an entrepreneur or a business leader and so on, this is not the end. It's just a delay. And it's a marathon. It's not a sprint. So everyone has his own race. So don't panic, please. Stay positive and stay safe. I hope I'm staying safe.
100%.
Right.
And focus on your team, focus on your people. That's really what matters. That's what a company is, right? So people working together towards the same goal. So yeah.
Thank you. Very wise words to close by. It was an honor. It was a great discussion. Thank you so much for giving us the time and giving it to our people. Thank you.
Pleasure.
Thank you, Hamza. Thank you, Kareem. Thank you, everyone. Bye.